Hello, savvy investors and financial enthusiasts. Get ready to dive deep into the world of Buffett's dividend method, why $150 is all you need. I'm thrilled to be your guide on this enlightening journey. In the moments ahead, we'll unveil the secrets behind Warren Buffett's dividend approach, chart a course towards financial success, and overcome any challenges that stand in our way. Keep watching till the end of this video, and don't forget to click the like and subscribe button. You might be feeling the impact of rising inflation, soaring fuel costs, and the high cost of living, and this might be putting a huge strain on your finances. But here's a simple solution from Warren Buffett. Invest, invest, and invest. Now you might be thinking that you need a lot of money to start investing, but wait, according to him, you can get started with just $150. So keep watching till the end of this video to find out, and don't forget to click the like and subscribe button. You see, money alone won't grant you financial freedom. Let's debunk this idea. Money isn't the magical solution that can transport you to a world of complete financial independence. As the multi-billionaire Warren Buffett points out, just having a pile of cash won't guarantee you the life you dream of. Consider this. When we spend our money on short-term pleasures instead of investing it wisely, we are essentially exchanging the hours we worked hard for, along with the incredible freedom it could provide in the future. The key lies in finding the right balance between time and money. It's a bit like creating a well-balanced meal. A pinch of time, a sprinkle of money, and you've got a recipe for true happiness and satisfaction. But there's more to this secret formula. Have you ever wondered how wealthy people maintain their financial success? It's not just about being great at saving. They've also become experts in smart investing. They set aside 20% of their income for investments, and this is where the real magic happens. They have automated systems in place that quietly move money into their investment accounts, keeping their financial future secure. But let's be clear about one thing. The path to wealth isn't some flashy get-rich-quick scheme. It's a carefully planned journey of making smart financial decisions. While everyone might be talking about the allure of quick money, remember that true wealth is built through wise investments. When we talk about investments, we're talking about the tools that can lead you to financial freedom. Income-generating assets are your ticket to success, and the dynamic duo, real estate and dividend-paying stocks. Sure, real estate might require a larger upfront investment, but with just $150, you can hop on the passive income train with dividend stocks. Warren Buffett believes that companies should pay dividends to their investors only if they can continue to create more value with the money they keep than what they would give as dividends. He points to See's Candy, a company he owns, as an example of a business that pays dividends because it remains profitable even after sharing some of its earnings with investors. This strategy ensures that shareholders benefit while the company still thrives. You might be wondering, wait, doesn't Warren Buffett stay away from dividends? Well, there's a strong argument to suggest that Buffett is actually a fan of dividends. To put it simply, today's real estate market has pretty high prices, and on top of that, real estate investment trusts, or REITs, are often selling at a premium. So I see REITs as not very appealing now, especially when compared to 5 or 6 years ago. But remember, this applies to a specific group of investments. For a corporation, the story might be different. Let's take a step back for a moment. While Buffett might not be the biggest advocate for paying dividends, he sure enjoys receiving them. And here's the reason why. It's all about the power of compounding. The longer you let your investments hang out with compounding, the more impressive the growth becomes. Buffett isn't just an investor, he's a wise advisor too. His advice: think long-term and practice patience. After all, compound interest is considered one of the most powerful forces on Earth. Imagine you invested just $1 and let it grow at a rate of 1% a day. In 5 years, that humble dollar would turn into over $77 million. By year 7, you'd be a financial wizard. Impressive, right? So why does Berkshire Hathaway, Buffett's company, pay dividends even though he likes them? It's all about creating maximum value for shareholders. Berkshire Hathaway reinvests its earnings to generate future wealth. While it doesn't hand out immediate gains through dividends, it's cooking up a recipe for even bigger profits. Buffett is all about playing the long game, and he famously said, "If you don't find a way to make money while you sleep, you will work until you die." Imagine a regular stream of income coming your way with no strings attached. It's like a gentle rain of money, perfect for retirees and those looking to boost their earnings. Isn't that better than trying to sell stocks at just the right moment to make a profit? Dividends are your reliable friends when the stock market gets turbulent. They're the safety net that keeps you cozy when stock prices get unpredictable. And the best part? You don't need a ton of money to get started. With just around $150, you can become part of the Dividend Club. Here's how dividends work. When a company does well and makes profits over a certain period, it's time to share those profits with the shareholders. The earnings are divided among the different types of stock, ensuring everyone gets a fair share. The company's board of directors plans this financial distribution, deciding whether to share the wealth with investors or keep it in the company for future projects. Nevertheless, if you like the content you're watching, comment the word "more" so I'll notice. Now let's dive into the world of dividends and explore two key players: cash and reinvestment. When dividends are handed out, you might see some extra cash landing in your investment account. It's the most common type of dividend, and it's like a friendly bonus. You can either withdraw this money or use it to grow your portfolio. Then there's another option: stock dividends. It's like getting a little gift of extra shares instead of cash, like a mini bonus from the company. But that's not all. Sometimes companies throw in an extra dividend as a special treat. Now you might be wondering, how much can you actually earn from these dividend goodies? Well, the payout game varies and depends on a few factors. Different companies have different dividend rates. Some are more generous, while others are more conservative. And remember, dividends are distributed per share of stock. So if you have a lot of shares, your dividend rewards will also be more substantial. Let's talk about the world of Warren Buffett and Apple. The financial expert owns a whopping 5.79% of Apple's outstanding stock, and this partnership has been incredibly profitable. Buffett invested approximately $36.3 billion in Apple shares, and he's seen a massive 381% increase in value. In 2022 alone, he received a whopping $823.5 million in dividends from Apple. Now that's what we call a nice piece of the profit pie. So why is dividend investing so great? It's like enjoying a reliable rhythm. High dividend stocks consistently share a part of a company's earnings with their shareholders. It's like earning interest while your money takes the spotlight in the investment world. But there's more to the story. When you receive those dividend payments, you have a choice: spend it as you wish or reinvest it in the same stock. You become the conductor of your financial symphony. When you choose reinvestment, you boost your returns through the magic of compound interest. And you don't need a lot of money to join in on this financial symphony. You can get your ticket to the dividend party with less than $100. And if you compare this dividend journey to real estate investing, buying a piece of land for just $100 is almost impossible. But in the world of dividends, not only are your initial investments smaller, but your returns also have the potential to grow as the company expands. Its stock prices rise, and those dividend payments start to increase over time. And this, my friends, is why Warren Buffett's trusted buy and hold strategy is the key to unlocking the dividend treasure. The longer you hold those stocks, the bigger your returns become. It's a straightforward lesson in patience. Choosing the right stocks for investment is crucial when you're aiming for a lifestyle built on dividend income. As Buffett wisely advises, buy a stock like you would buy a house, understand it, and like it enough that you'll be happy to own it even if the market disappeared. Buffett's method for finding successful stocks is based on his value investing philosophy. He looks for companies with a strong track record of profitability, especially when compared to others in the same industry. Buffett also pays close attention to a company's profit margins to ensure they are solid and growing. Additionally, he seeks out businesses with unique products or services that give them a competitive advantage. He's also on the lookout for undervalued companies that are trading at a good discount. In his criteria, Buffett prefers companies that not only consistently pay dividends, but also have a history of increasing those dividends over time. That's it for today. Thank you for watching, and don't forget to click the like and subscribe button.